Hi, I am Anna. I come from www.ntvforex.com. Sentiment looking more settled, but GBP underperformance on Brexit risk continues. Video analysis. http ntvforex.com News ID 373153 9/8/2020 12:31:57 p.m. Market overview. Markets are looking more settled in the early part of this week. A U.S. public holiday seems to have come at the right time as the selling pressure of last week through equities appears to have turned a corner again. Treasury yields are looking stable today, whilst a strong European session yesterday is set to continue early today. As the week progresses, trader will become increasingly focused on the European Central Bank monetary policy decision. Euro traders seem to be increasingly on tenterhooks. There are a few mixed factors coming out of the Asian session. Japanese Q2 GDP was revised lower but came in better than expected, whereas President Trump has suggested the potential to decouple the U.S. economy from China. Furthermore, there is an ongoing concern that the path of EU-UK post-Brexit trade deal talks is heading towards a dead end. Quite how the EU would react anything other than negatively were UK Prime Minister Johnson to suggest a rewrite of the withdrawal agreement, remains to be seen. More talks are scheduled for today. The growing relative weakness of sterling reflects the growing concern of the market. Wall Street was closed for Labor Day yesterday, but futures are ticking positively early today to suggest that the recent selling pressure has been relieved. E-mini S&Ps are 0.6% early today. In Asia, there has been a mildly positive session, with Nikkei 0.6% and Shanghai Composite 0.8%. European futures are also gaining, with FTSE futures 0.3% and DAX futures 0.4%. In Forex, there is a mixed outlook, with GBP still under pressure, whilst AUD is performing well and USD is fairly mixed. In commodities, a mixed dollar outlook has allowed gold and silver to tick slightly higher, whilst oil remains under pressure amidst questions surrounding strength of demand and recent price cuts from Saudi Arabia. It is another quiet day on the economic calendar today, with no US data of note in the afternoon. So the focus is just on the revised Eurozone Q2 GDP at 1000 BST. This is the third and final reading of growth numbers, and is expected to be confirmed at 12.1% unchanged from the flasher reading of 12.1%, after 3.6% in Q1. Chart of the day. A USD CHF NBSP is a near-term recovery looming in the past few weeks. The market has been consistently forming support around the key psychological 0.9000 level. Swiss National Bank intervention, building a floor. In recent sessions where the dollar has begun to strengthen, the rate is now picking up. Intraday moves above 0.9160 previous lower high have taken USD CHF to a near 4-week high. With the market moving on today, a close above 0.9160 would be a move that begins to threaten 0.9200, the first real resistance for recovery. Improvement in momentum indicators is taking hold now, with RSI above 50 being the highest since May, whilst MACD and stochastics also accelerating higher. The bulls need to really get through 0.9200 on a closing basis, the old mid-August high, but also basis of the key March low, to complete a base pattern and suggest sustainable improvement is building. This would then imply a rebound towards 0.9400 in due course. There is good near-term support now at 0.9080, whilst the 21-day moving average bottoming out around 0.9100 is an encouraging signal too. For now this is a 200 pip range, but the development of indicators suggests that a recovery is certainly threatening. Above 0.9200 and we look to buy into weakness. NBSP Brent crude oil another negative session and the outlook for oil remains under growing near-term corrective pressure. There have now been 4 decisive negative sessions in a row now, with momentum indicators taking an increasingly sharp deterioration. The move is setting up for a test of $41.30, which has been a key support in recent months. Although there was an intraday rebound off $41.50 yesterday, the negative pressure remains today. The key to the outlook is also how the market responds to intraday rallies now. There have been 9 negative candlesticks in a row, where the session close has been below the open. This suggests the bulls are weak and hold very little conviction, even on days where the market has traded higher. So we concentrate on the old resistance of the old support at $43.60, $44.55, which is now overhead supply. Failure under here on a near-term bounce would suggest further pressure back on $41.30. Below $41.30 opens $37. Dow Jones Industrial Average. The sharp correction of the U.S. tech sector has significantly rocked the confidence of Wall Street bulls. Volatility has spiked higher and a second session of selling pressure hit the Dow on Friday. Despite this though, the market closed well off session lows and some important technical support levels held firm. The confluence of the big medium-term support at 27,580 and the 5-month uptrend remains intact. Also, the market closed back above the 28,000 support. After being closed for Labor Day public holiday yesterday, futures are ticking higher once more today and a degree of support seems to be forming. It is important that this setup for an early rebound is not just seen as another chance to sell. Holding these support levels will be key, as for now, this move is just another near-term retracement within the medium to longer-term bull market. Breaching 27,580 would be a real blow to this. Initial resistance for the bulls to overcome on renewed buying pressure is at 28,540, 28,735. If this can be breached, it would suggest the selling phase has played out and the bulls can eye the 29,200 high again. We remain buyers into supported weakness, but the outlook could quickly change if 27,525 is broken. Other assets insights: Euro USD analysis, read now. GBP USD NBSP analysis, NBSP read now. USD JPY NBSP analysis, NBSP read now. Gold analysis, read now. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.